that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets a step at a time, look at the charts, break down the news, analyze it, give you guys any insight that we have as coaches over here at Tackle Trading to help you better run your daily routine and get into the markets. Welcome. It's Wednesday, 1/13/2021. Got a fun show for you guys planned. Not a lot going on out there in the broad markets. Obviously, we're kind of dojiing up here. Some healthy chart price action for the bulls, kind of holding, sustaining. Even tech is looking pretty good here today. But we're going to go through it a step at a time, look at all of the charts, break that down, analyze it for you. Got some action out of some individual companies. KB Home had their earnings. Home builders have been, very popular last year for cash flow traders. Investors tend to like them as well. Intel CEO stepped down. The stock popped on that news. There's some interesting price action in that regard, but we got good potential trade setups as well. We're going to take a look at a few of those. Today, we have Coach Tyler Craig, here to join us. Tyler, how you doing, sir?
What up? Hey, I'm jazzed after that intro music. I had my volume up too loud, and I think I'm deaf now, but I'm pumped.
You always got to have a good song. There's a reason why before a boxing match, Tyler, they always got the fight songs coming in, everybody getting jazzed up, fired up. What would be your intro song to Tyler in life? We're introducing you to something, we're doing it up, you're coming into the ring.
Probably Enya, an Enya song.
Enya, huh?
Yeah, just put you all to sleep.
I like it.
I want to be very anticlimactic,
Go the other direction with it, kind of say, hey, listen,
guys,
we're not getting too.
I don't know.
All right, buddy. Marky, how you doing today, sir?
Listen, if you're not making money in this market somehow, you really need to reevaluate what you're doing, because this market is a trader's market, to say the least. You look at, when you look at the price action on the SPY, for example, it hasn't done a whole lot this week, but there have been some powerful moves in individual trade setups. And then obviously the cash flow paradise, it is just ridiculous on the cash flow end. I hope you directional traders are doing a good time. I know the cash flow side is just like it almost feels too freaking easy, right? And you got to guard yourself against that. So needless to say, I'm having a good day.
It's been a good market for a lot of traders. There's no question about it. In fact, you start to see the frothiness. You start to see people like, smashing the sell button, taking profits. You want to applaud that at all times. Everybody wants everybody else to make money. It's one of the most beautiful things about the stock market. We're not competing. If Mark makes money, it doesn't affect my ability to make money or Tyler's ability to make money. But when I start seeing it be a little bit too easy, Mark, I get a little cautious. And the only message I usually have is, guys, just make sure you check your leverage, check your margin, check your exposure. Take profits on directional stuff, keep hitting your targets, but let's not let that greed impact our portfolio design and our game plan here, Tyler. And it's natural, right? When markets feel easy, you start clicking buttons a little bit more easily as well. What are your thoughts on this, Ty?
Well, what's interesting is there are, some people will say, hey, it's, the market's up a lot, we're overbought. Some people even use the word bubble. I just ran the numbers. The S&P since September 2nd, and I am cherry picking this peak here, the S&P is up a whopping 5.7% since September. So yeah, September, October, November, December. Here we're halfway into January. 4.5 months, and the S&P is only up 5.7%. So there are areas of the market that are frothy and perhaps bubble-ish, but look, man, up 6% ain't that crazy. In fact, it's not crazy at all. And so just remember that even though there are some areas like Tesla and Bitcoin that are cuckoo, the overall market really has not gone up that much if you're looking at the S&P 500.
I will let you cherry pick that peak to peak and make it. I'm okay with that for the time being, but it's more than that.
Oh, listen,
Tyler.
come on. We're in a bubble. We're in a bubble.
Stuff.
We're in the 99th percentile of almost any fundamental metric you look at. We're in a bubble. I don't care that we're in a bubble. It's like I talked about on the Sunday show. I believe we're in a huge, massive bubble. And my final thoughts on Sunday were, and I'm going to trade this bubble to the bullish side every freaking week until I get at least some support level break on some index somewhere, right? Mm-hmm. I'm not going to sit there on my hands. And once again, I'm on the extreme. This is a ridiculous bubble that's going to be a painful burst someday between now and 2030 million years from now, right? I'm not going to sit on my hands with the knowledge I have of technical analysis when I know we're in uptrends, when I know we have moving averages as support, when I know we have infinite horizontal supports. You got to take advantage of your knowledge. You know, when we have support level breaks, we can have conversations about what we should do then. Until then, you take advantage of it.
Mm-hmm. Tyler disagrees with the bubble comment. I believe he's sitting back. I can see it in his face. He's got his hand on his chin. He's contemplating. He's getting very stoic. He's like, should I go into this whole thing about, price distribution and drawdowns and all that? No, Tyler. We are. Just accept it. Embrace it, brother.
Okay.
It's
Right.
it's the roaring 20s, the new roaring 20s. Here we go. We're bullish and things are very, very healthy. By the way, let's analyze this market one step at a time.
Just one last thing on the bubble comment. Let's say you do a bullish trade this week, right? Let's say, for argument's sake, we're in a gigantic bubble. Does it matter if it bursts 6 months from now, if you're in a trade for 8 or 9 days? Of course not. Doesn't matter at all.
On the short-term stuff, but even in the face of the long-term stuff, I still think equities are the place to be, quite frankly, because I look at the rest of the markets.
And that's the thing is, we could talk about this for 3 hours, but I feel like, and I'm the one who brought it up, not you guys, but I feel like when you use language like it's a bubble, people use it as an excuse not to participate and or to be scared. And I always come back to, well, what's the alternative to Tim's point? It's like, okay, so you want to be an investor and you say, well, it's a bubble, so I'm not going to participate. People have been saying this is a bubble for 5, 6, 7 years. And so I guess my point is you can't use that as an excuse not to participate.
You cannot use it as a,
yeah.
Yep. No, we're all in agreement on that, because you can't. I mean, here's the thing. I mean, and one of the things that got me super serious, it's not like I haven't been super serious, but about a year ago, I started getting really super serious about trading and this and that, because, I mean, obviously we're going to deal with inflation. You cannot let your money sit there. The person who puts their money under the mattress 30 years from now, they're not going to have very much money. They'll have the same amount of dollars, but you have to grow your money. Trading and technical analysis and using the knowledge that you can acquire can help you manage almost anything. And so get in there, participate, bubble or not.
I think we're all on the same page in that regard. Let's start analyzing these charts here if we can, Tyler. Take a look at this S&P and kind of break it down one step at a time. If you want to go through all 4 of the indexes, I see some actual relative strength in the NASDAQ today, so I wouldn't mind peeking at that one in the Russell. So take a look at the 4 indexes if you can.
Sure. So the S&P's been pretty quiet lately. I mean, boring, in fact. Did I tell you since September, it's only gone up? It's been pretty nice the last few days, right? Small candlesticks and just consolidating. The theme is going to be the same as every time we effectively meet here. Rotation. Yesterday, small caps were going gangbusters. Everything else took a nap. Today, it's the opposite. Small caps are pulling back. Everything else is picking up. What's nice about the S&P is it takes a nap. It doesn't have a big distribution day. So the reason Mark is pounding the table on how the market is so easy right now is because it's not testing your resolve at all. This is one of the reasons why bull markets are easier to trade than bear markets. When you look at down moves in a bull market, especially this type of bull market, they're benign. We get hit one day and we're right back up the next. It really doesn't test your faith. When you're going bearish in a downtrend, adversity, when you get bounces in a downtrend, they're vicious and scary, and they just cause you to bail on bear trades. And so what makes this such an easy environment, again, is just the lack of teeth on these rare pullbacks. Yesterday, look, we went down in the morning and then right back up and ended with a doji. Today, we're up 0.25%. In really the last 5 days, we've done nothing, but you'll notice that we're just kind of gradually drifting higher, 20 MAs rising. From a pattern perspective, honestly, I don't think there's been a super clean pattern on the S&P for a couple of weeks. It's just grinding higher. The trend's continuing. And I mean, if you want a short-term support level, look, if we take out yesterday's low, maybe that gives me a tiny bit of concern in the short run. But consolidation like this at highs is anything but bearish. It's very constructive.
Mhm. You know, Mark, this price action, obviously, we're taking a look at the daily candlestick chart. As you see it as well, do you see it just as constructive and healthy? The light ranges, do you see this as kind of the calm before a storm potentially? We got earnings
Well,
season
it's the
coming
thing
up
is,
starting on Friday, really.
the one thing you haven't heard me in my grumpiness, remember back in the run up in August, I was in such a bitter, foul mood in that because it was so fast. And these fast moves, they're not sustainable. Maybe on individual stocks for individual stretches, but the breadth of a broad market, they're just not sustainable. You look at the super fast move up in January of 2018. You look up in the run up in August of this year. Those fast blow off tops, they're not sustainable. We haven't had that in this stretch since the election. Yes, there was the little post-election bump as to be expected, but then it has been very grindy. And I'm on the record for years. I love those uptrends.
Mhm.
Those uptrends, they can produce really good individual trade setups for directional traders. They can produce amazing cash flow environments without having to worry about that technical blow off top. And we saw that. We saw that in January of 2018. We saw that in August where it ran up too much, didn't create support. And then you had these huge technical sell-offs. We haven't had that in the last 2 months, which I love. Keep grinding, take up another level, grind some more, take up another level. It produces overall this amazing trading environment. So I just hope it keeps up.
You know, Tyler, as I look across the other indexes, the NASDAQ grabs my attention the most here today. Actually, I'm kind of curious if you think it's actually a new entry point. Got a 2-day flag. That's not a retracement or a deep pullback by any stretch of the imagination. But Mark, we are riding the moving averages against old resistance. Tyler, is there something here potentially?
Well, I mean, tech has been one of the areas. Small caps have been leading, and tech's been pausing. If you look from a sector perspective, what areas aren't super hot and overextended, I'm sure you can find a lot more lower risk entries in tech right now. The question is it going to wake up, and be the real deal? Because a lot of these, especially the big cap tech stocks, they've just kind of been sluggish. So if I'm being optimistic, sure, hopefully this is the start of something bigger. And it is a sign of hope and optimism that we are seeing a little bit of relative strength today. So yeah, I don't mind the setup at all. I mean, this bounced right where you wanted it to at the 20 MA, and it is showing strength today. I mentioned in the pre before we started, small caps yesterday were up huge. Today they're down. Tech was down yesterday. Today it's up. So we're just it's like the indexes are being kind. They're friends, it's like, let's play follow the leader. And the guy who's in the lead's like, oh, you haven't had a turn. Tim, you take the lead. And then Tim takes the lead and it's like, well, we're leaving Mark out. Let's let Mark take the lead. And it's just this kumbaya thing with the market right now where they're just, I don't know, they're kind. Like I should honestly.
Tyler, we saw that in a different way in the summer post-COVID. And you saw it in a different rotation way where it was, tech was always having its day, but when tech didn't have its day and there was like positive virus news, then you'd see other areas of the market. And there was this rotation between stay at home and stocks that were beat up and tech. And that rotation from day to day leads to this cumulative lifting of everything. It's a sign of bullish sentiment being as strong as it is. It's a good thing. Can make it tricky sometimes if you're trying to pinpoint the exactitude of certain entries, but overall, it's a nice game that one crew plays for us. So
yes, yeah, and like from a sector perspective, energy has been killing it. It's pausing today. Good. Like we want them to pause. They give you new entries, right? You need this refreshment and this respite from just going up every day to provide new entries. And it's just glorious that on a day where financials and energy are like, dude, we're tired. Tech's like, no biggie, I got it, right? And just picks up the slack. It is indicative of a bull market. It's a hallmark of a bull market, and it's just another reason not to fight the trend.
And a lot of those big names in tech have not been great, throughout the course of this last couple of weeks to months here, Tyler, but they're starting to pick it up here today. Apple up 1.6%, Netflix looking good, Amazon coming back a little bit. I know different names, but the big names in QQQ are starting to represent a little bit here. So I'm with you. And I do think it is that little, playing leapfrog, let the small caps go, let the big caps go, bring in healthcare, bring in energy, bring in financials. They just keep rotating back and forth. Is a really interesting market condition in that regard. Let's keep flashing through if we can. Let's take a look at commodities next and move on. Let's do oil, crude oil first if we can. It's probably been the healthiest of the commodities here to start the year. And, obviously just kind of running to the upside. Bullish sentiments come back in some ways, but now we're range up. Tyler, is there anything here, besides just a continued uptrend? What do you see in the chart?
Yeah, I mean, here's a situation where in terms of new entry point, no, I mean, do you learn in a chart reading textbook, go look for a stock that's in an uptrend that ran up 1, 2, 3, 4, 5, 6 bars, and then buy it on the 7th bar if it's a down bar. I never learned that. I mean, I was taught, like you said, look, it's run out of gas. This is not a low risk entry. This is why it's good that crude oil and energy stocks are pausing, because this is being echoed by XLE, right? The energy ETF, which is up quite a few bars. You take a look at XOP. I mean, look, are you mad if you're already in this? Maybe, I don't know, be happy. You just made a bunch of money. If you're not in this, you wanted to pull back. And this thing has ripped the last couple of days. So I got no problem with crude oil chilling out here a little bit. It's only down, 0.68% on the session. This could pull all the way back to $49 and I'd still like it.
I'd love it.
Yeah.
I mean, I'm listen, the powers that be, listen, and you've seen it out of the banks recently. Goldman Sachs upping their price target to 65. Many other analysts have come in and said, listen, as far as energy stocks themselves, we are at the start of a really bullish thing. You always complain on energy stocks, pull up energy, anything, Apache, XLE, Exxon, whatever else. Huge day on breakout yesterday. There is a lot of froth. It is finding setups. You get setups in energy, I would take them. I take them directionally. I would certainly take them on a cash flow basis down below. I'm increasing the percentage which I do oil right now. The sentiment's out there right now. And that's what matters in this market. Fundamentals right now. Marijuana stocks, they get hot. Look what happens. EV stocks get hot. Look what happens. Banks get that sentiment behind them. I think there's great cash flow opportunities in oil right now. In my read of the sentiment room.
Do you think Exxon has a chip on its shoulder?
Screw
you guys. They took it out of the Dow, right?
They did, yeah.
Yeah. I think it got taken out of the Dow, and it's like, screw you guys. You're gonna regret that. You are gonna regret that.
Maybe, I don't know. I mean, they made the call to put CRM in the Dow, which I actually kind of did support. I'm with you. Maybe Exxon does have a chip on the shoulder. Maybe they come back and they got a little bit of upward mobility. They're up here today 0.9%, while some of the other energy stocks are down. So yeah, interesting. By the way, back on crude oil for a second, I did find one of the news stories today that was interesting was on the airlines market. I don't know if you heard this. I think we did talk about it pre-show, actually, now that I remember. The U.S. is going to require, starting on January 26th, that anybody flying into the country, U.S. citizen or not, can show and must show a negative COVID test before they can get on an airline, trying to curb the spread of the virus.
I mean, pull up an airline chart. I mean, I don't know what that means market-wise. My brain isn't smart enough to know any of that. But I do know that in the run-up, right now, I mean, and once again, call me a millennial, call me a momentum chaser. I don't know what it is. But I do know that airlines aren't loved. I mean, they had that post-vaccine run-up, and they're just immediately started selling off, right? Remember all the Dave Portnoy's in the summer right after COVID. It's like, buy the airlines. Buffett was, yeah, they've moved on to SPACs and FUBU and JMIA and all of these new sexy things. Airlines were sexy to that crowd once upon a time. They've moved on. They got all these other new toys to play with, right? So, I guess if you want to lob naked puts down below, makes sense on that from an airline perspective. Probably not the worst play in the world. But there's not a lot of love right now for airlines out there in the trading world.
Yeah, the love may come later in the year, obviously, when we get a true reopening of the economy, as we watch how vaccination rollout works, and if we can get to those critical mass points that we need to get to. I like the move here in in the short term. I don't know if it means anything for price action though. Giving business travelers more confidence to get on planes and companies more confidence to book trips is a good thing for international business.
That makes sense.
Many companies are probably looking at, okay, how do I plan out my events through the year? And I know a lot of businesses are wanting to get back out there and go to trade shows, and the CES show is not going to be virtual in Las Vegas forever, Tyler. Eventually people are going to want to go back down and hang out in Vegas and go to these trade shows. So I think it's a good thing. Anything to give confidence to business travelers, I think, can be a good thing. And we'll see if that ends up coming through to fruition over time. Right now, airlines are kind of sleepy a little bit. I don't think they're necessarily bad. Tyler, you're flashing through those charts. I see some potential development in there, don't you think?
I think so. Naked Puts have worked on these things for like 8 months. I don't know why they wouldn't continue to work. You've got an earnings announcement coming up, but when have earnings mattered on these? They haven't mattered post-pandemic. So.
No, I mean, the cash flow element of airlines really has been good. I mean, go look at the chart and tell me when lobbying a naked put several strike. And the volatility has been high for 8 months on these, right?
Well, and I remember when I remember being on here with Mark when the Pfizer vaccine news came out, and all of these went ape to the upside, and we said, who wants to be short these now, right? I mean, they've already been beaten to shreds, and now you have the vaccine hopes. And really, ever since early November, it's like, look, it's very hard to be short these. And so I'd be scared if I was short. Any whiff of good news caused them to go up. So, I stand by that call, and I think they continue to be interesting.
Let's go to the metals market next, actually. And Tyler, you wrote about this recently in a blog over at Tackle Trading about the sell-off in gold and silver, how there was a silver lining in it. Let's take a look at the price action. Little bear, flag developing, but kind of just consolidation at the 200. I think it's healthy to have a couple of dojis. The volatility last week obviously shook some people out in the short term, but long-term investors aren't going to get shaken off of gold. Tyler, what you read on gold and silver?
Gold's been a lot harder for me to pin down than silver. And maybe we just need to resign ourselves to the fact that it's more range bound and choppy than trendy, right? Maybe if we set up our perspective that every time gold breaks out, it's going to rip higher like these momentum stocks. I mean, maybe we should change that a little bit. Am I saying that having been bitten twice? Of course. Of course I'm saying that. Maybe this is the new normal. And now that I've resigned myself to that fact, I'm sure the next breakout's going to go.
Yeah, you weren't here on the show yesterday. We had a cash flow club takeover here on the show yesterday, Tim and Tyler. Emily was here, Greg was here, I was here. We were talking just cash flow, almost the whole show. And gold, listen, like gold for me is the easiest thing in the world to do. But I'm pure cash flow on gold, and I'm aggressive cash flow on gold. So like when you have these drawdowns, it takes a hit, right? But I start selling calls on the gold mining companies I have. If it were to drop even lower, I acquire more, cost average down. From a pure strict cash flow standpoint, gold's been great for months and months and months. It can be tough for directional traders, right? But guess what? You get everything else.
True. That's true. Well, and I think it just goes back to knowing your instrument and understanding the personality of it, right? And so you've found a style of investing and trading that works well with this particular product. Perhaps I'm just relearning that it's just not as great for directional stuff. But in the short run, Tim, I guess my point is if the overall context is we think more range bound than directional trending, I'm not going to obsess over every little flag or retracement because the overall context is kind of sideways. And so I kind of read less into, okay, could this be a bear flag and we have another big down move? Yeah, maybe, but it could also very well just be choppy sideways because all the moving averages are flat and, it's just kind of dull right now.
And I got no problem with dull. Dull does not bother me with gold as long as things settle down. Just the volatility calming down gives me more confidence with it this week. And it's been a great cash flow instrument, guys. No question about it. You specifically though, Tyler, did talk about silver in your blog. And I think you picked up some ownership here, didn't you?
Yeah. So yes, so with silver, what makes S and I usually use the ETF SLV, but they're effectively the same. What makes silver more interesting for me is two things. Number one, it tends to trade with a higher volatility than gold, which means its options are juicier. So I can build a cash flow trade on silver with a higher ROI than gold typically. And the lower price tag makes it more appropriate for like a naked put, whereas gold generally you got to do bull put spreads. So if I had to pick one of the two, SLV for silver, GLD for gold, if you said you can only cash flow on one of them, I would take SLV. And so rather than focusing on gold in that blog, Tim, I just said, look, this pullback in silver is a little more attractive for the reasons I just said, and the technical setup is better, right? SLV is above the 200, it's still above the 50. Its moving averages are rising. Gold, when you look at it, it's more flat, and it broke the 50 MA. So I was just more interested in buying the dip in silver, and it's held up so far. So I had highlighted just an example of selling puts in SLV on that pullback. And at the time for the 21 strike, you could get around a 20% return out to February, down around the 200-day moving average. So that to me is a pretty attractive trade setup.
Yeah, and I do think it does have the relative strength in the short term. Obviously, playing them for different reasons, different representation in your portfolio. But I do like that silver chart just a little bit better here in the short term as well. There, Ty. Let's keep moving through here if we can. Take a look at the dollar. You need to spend less than 10 seconds on it. It's in a bear retracement. Not much going on. Go to Bitcoin though. I do want to spend some time on Bitcoin for a couple reasons. Number one, Tyler, you're just a technician and you don't have any.
Put on that 9. Where's my girlfriend? She's in play here. It matters. Mark's girlfriend. Thank you very much.
Just on its own here, Marky, we've got a little interesting technical pattern developing. We're above moving averages. We are holding the 30,000 mark. Bitcoin has played defense. I got to tell you, as a long-term Bitcoin holder, I had my popcorn ready. I wasn't going to do much about it if it broke down because I've got a long-term premise on this. But that 30,000 level I thought was definitely significant here the last couple of days. For right now, it's holding. Tyler, technical read first, then Mark, give me a read on the action.
I mean, you got to be impressed. They scared the children in 24 hours, and they're like, all right, that's good enough. We just wanted to, we just want to put them in check a little bit. We're not going to go up every day. You had zero follow through after a massive distribution day. Maybe we're just in an environment where corrections happen in 24 hours. You have these micro cycles in Bitcoin, and they just, it's like, I'm done. I had my correction one day, I'm back up. I'm impressed. Yesterday it held up well. Today it's holding up well. As somebody who wants to buy the dip, you probably would wish it would come down further, but so far you got to be pleased by the.
Well, I mean, and here's the thing from a big picture, and this transcends Bitcoin. As a volatility trader, go find me a single thing. There's been instances of things down 15, 20% in a single day. I mean, just let me give you just one of a million examples. Pull up Yext. This is the only place that Yext and Bitcoin will be correlated. So in Yext, you have that big candle down on earnings, right? It drops what 20% in a day. There's no follow through anywhere. And so like back in the day, i.e. 2019, right? You'd see some like shorter term downtrends stop. When you have these big 20% moves down, sometimes they go down a little bit, but then they find themselves again. I mean, and so nothing's ever punished in this market.
Yeah.
Until something is punished somewhere, people will take advantage. There's just no fear. 20% down move, people see that as a buying opportunity. Now, can it lead to further decline? Sure, but it's not surprising that it's holding up right now. What's going to be interesting if it can get some momentum going again, right? Some momentum, or if we flatline here for a while.
Yeah, it's not followed through into a bullish entry point yet. You just got to be excited, maybe happy if you're a bull that it's held up. Like you said, though, Tyler, there's so many different perspectives in the market. If you're waiting for a deeper pullback, you're like, all right, is this all I'm going to get? You're probably sitting there thinking, is this really the entry point? Right. And you're trying to figure that out. How do you make the determination? Do you wait for confirmation? Do you play it directionally?
I think it depends on how anxious I was to get some exposure to something. So if I've been waiting for a long time to get my foot in the door, then you can't be. I mean, look, if you say, hey, you have to go down to 20,000, I'm not going to touch you. Fine, but don't be mad if it pulls back to 30 and goes right back up, like you were just too discriminating. So I don't think there's a right answer. I think part of it is how anxious are you to get some exposure on this particular instrument, whether it's Bitcoin or anything. This is enough of a pullback, I think, from a technical standpoint, where if it does start to go up and break a prior bars high, I mean, I could see somebody trading this as it starts to rise. Is it a great long-term entry? I mean, who the heck knows? I think that you probably wanted something deeper if you want a longer-term trade. The solution for me is I could just do a half and half. I mean, so sometimes if I don't get the ideal pullback, and maybe I say, well, if this is all they're going to give me, I don't want to miss it. Maybe I do a half size, and then it's a win-win. If it goes up, at least I got some exposure. If it pulls back deeper, I can put the rest on. That's always my cop out or my hedge when I have a lukewarm setup that wasn't perfect.
Yeah, and I think that's not a bad plan there at all. Let's move in and talk companies here, guys. Next, there's several in the news I do want to have a discussion about. By the way, if you're out there watching a show right now, love the chat, love the energy. It's always great to have Team Tackle coming in here, having a conversation about markets. Warms my heart, makes me a lot of money as well, as we are all approaching the markets in this same fashion. Let's talk companies here today. I think we got to start with Intel. Bring in INTC. And sharing ideas, Mark. That's what the whole idea behind these shows, right? I mean, tonight you guys have been doing trade masters and giving you trade picks and trade ideas. I'm excited for that event tonight, but let's talk through some of these news items. Marky, is there any interest you have in Intel here? Stock is popping big today after the CEO, Pat Gelsinger, resigned.
Intel for me, and anybody that's followed me over the years at Tackle Trading knows this. I got a couple companies, Intel, Pfizer. These companies for me, because of their large nature, when they get down low, like Pfizer in the low 30s, Intel in the low 40s, I think that's where you start your bottom feeding thing. They're established, and it happens more than you would realize on Intel. If you pull up a multi-year chart on a weekly chart on Intel, you'll see this. And that's when there has been amazing opportunity to play this massive support level that's formed. You bottom fish, and it's just, when something works, you do it over and over and over again, right? And so when that happens, that's when you get in. Like chasing Intel, where has chasing Intel? Sure, there's been some pockets here and there where you could trade Intel. Where has trading Intel worked? Like to the upside, there's been maybe some stretches, right? But you just got to understand the personality of the individual trading instrument. When Intel goes into the mid 40s, I'm a buyer, and I'll be a buyer until that doesn't work anymore. When Pfizer goes into the mid 30s to the low 30s, I'm a buyer. Chasing it, I mean, you go find me, go back. I mean, we got 3.5 years now. Sure, little stretches here and there. It's a buy the dipper. It's not a chaser.
Ty, when you hear management change, and that's what creates a pop, I mean, that's usually just a presumption about new management. Maybe the algos pick up on the headline like Mark always talks about and pops it up here. That is an ugly daily candle. I mean, I can't even imagine how you would map out an entry point if you were trying to chase this. What do you even do with this? Do you just have it, on an interest list potentially? Because Intel's been a good cash flow stock over the years. It's a good fundamental company. Other people have played this for the dividend and the cover call for a long time. Does it get your interest at all when you see something like this?
Well, so two thoughts. The first thought is, do you think that if the board of directors knew that Intel was going to go up so much if they booted the CEO or if they made him retire, do you think he would have done it earlier?
Maybe.
Like maybe they're sending him emails today being like, hey man, sorry, but had we known this was going to happen, we would have booted you 3 years ago.
Yeah. I mean, that's a big pop.
Just a kick to the old ego that, hey, once the old man's out the door, we can move on into the future. Let's jack this stock price up. I'd feel pretty bad if I was that guy, but whatever. He's probably got gajillions in the bank, so he don't care. As for the candlestick, yeah, this is tough. I mean, look, they basically gave you all the gains overnight, and so if you look at this since the open, it's essentially all it's done is gone down. Maybe it doesn't help that it gapped right into a gap fill area. I mean, you basically got everything back that you lost on this nasty earnings announcement. So when you gap into potential resistance, that's always a really hard gap to buy, because it's not like you gapped to where there's clear blue skies and no overhead supply. So from a technical analysis perspective, that's a tough area to gap into. And now you're in no man's land. I mean, I don't know what you do with this. You got to give it a couple of bars and see how it digests. Maybe it gives you a pullback and, 55 becomes support and you get a little pullback opportunity. But the reality is you also have earnings in a day or two. So this is really a stay away for me, I think.
Yeah, 100% for me as well. GameStop is the next one I want to talk about. Now, this one's interesting because it's had a lot of juice on, by so many different groups that are newer to the market. I would just say it like that, Mark. And people have been assuming the stock is going to make these huge moves. And then here we are, we're up 74% here today on Wednesday, 113. It's crazy what's going on. And basically all that happened is they brought some people into their board of directors. The video game company announced that old Chewy co-founder and former CEO Ryan Cohen is joining the board with Alan Adel and Jim Grube. Basically, GameStop came out and said,
Ryan Cohen must be a heck of an individual. He must be Elon Musk times 10, right? Ryan Cohen, geez, moving a stock 71%. Or we are in a freaking bubble with zero fear, and any algo headline. And listen, we've seen this so often, and it has been on crack since the election. Algo headlines are getting huge, massive moves. Now, one of the reasons the move in GameStop is more extreme, GameStop has one of the only real battles between shorts and bulls out there in the market right now. Huge, massive short interest. I don't even remember. Somebody look up what the short interest is, and that I'll look in a second. But it is massive right now. And so you get these breakouts, and that you get like short covering. They start instituting at higher levels. But it is a short seller's blow off on GameStop today. So.
I'll have to do the calculation on what the short ratio is because it's not provided. I got to figure out how many shares outstanding. They got 50 million shares of their company short right now. There was a big short position being built on it. This looks like massive short covering though. So whatever the number is at the end of the day, Tyler, we're going to have to figure out who pulled out of that, because when you see this kind of thing, company really heavily shorted and then jumping on big news, it's a short covering rally.
But it's not big news.
It's not big news.
It's news.
Yeah, on news. That's right.
No, did you hear who they added to the board? Don't discount the power. You let in with it, Mark. You ever heard of that guy?
Dude, he is obviously the smartest human being on the planet.
If you're being short, look, being short a stock that goes from 20 to 40 is like being long a stock that goes down 100%, right?
Yeah, it's painful.
Oh yeah. Yeah, it's not. Yeah.
But there's nothing.
I just don't understand, and this is like on the podcast the other day. Old what's his name from The Big Short, who has the massive Tesla short position. Mm-hmm. I just like, I don't get fundamental shorters in this market. Like what is his name? Michael Burry or
Burry? I think is what he said.
Michael Burry. He has this. Pull up Tesla's chart. And he says he keeps adding to it, and his short position is getting bigger and bigger and bigger. And this guy's obviously brilliant, right? This guy is not a dumb guy. But man, can you wait at least till it gets under the 20-day moving average or some technical signal or something? I don't get. Fundamental shorters have been crucified in this market the last year. There will be a time to short. And the shorts, and you'll make a lot of money. But man, it just feels like a bad read of the room. It feels like someone trying to guess a top. And how many times does that work out in life? Like I'm going to guess the top. Wait for a technical signal. Learn to read a chart. Something.
Tesla once had a short float over 30%. Its now short float is 5.9%. That's because they've all lost billions and billions of dollars shorting this company for the last 2 years, Tyler. Literally just been wiped out 100%. Yeah.
It doesn't matter if you're right. If you lose all your money between now and being right.
That's right.
You can say, hey, I knew it. But listen, it doesn't matter if you lose all your money between now and then.
What's the old
You know?
phrase? The market can stay irrational longer than you can stay solvent. Just because
Yep.
you have an idea, right? Yeah, yeah.
And you might be right.
Yep.
You might be right. But learn to read a chart.
Yep.
Michael Burry.
Couple more news items I wanted to get to. KB Homes. I want to look at a XHB on this announcement as well. I'm interested in home builders always because I like the dividend and cash flow potential behind some of the names. KB Homes actually reported their earnings, first one out of this industry to report this quarter. Came in at $1.12 per share, beating the 93-cent per share expectation. Company reacted to it in a positive way, gapped out, red candle. Not much there from a technical perspective, in my opinion. I'll get Tyler's read. But Tyler, tell me what you're seeing here, but then look at XHB as well and tell me if there's something interesting in that chart as well.
One of the themes that with our discussion today is knowing the personality of the stock, right? Gold and silver and KB Homes. When you look at KB Homes, does this look like a good swing trading stock? Does it look like there was some really good follow through on breakouts, really clean bull retracements? The answer is no. And so I just know the personality of KB Homes does not lend itself well to swing trading. So ultimately, then my perspective and my focus would be more on position trades, right? And it perhaps even go into a weekly chart and using that. So when you look at with that in mind, you look at the pattern into today's earnings and you say, well, it was in a downtrend. Did today change that? Yeah. I mean, it broke out. It's now above the 50-day moving average. So that's noteworthy, right? Is it trade worthy? Well, again, what has it done since the open? It's been kind of a mess. And now you have this big old candlestick. I would view this almost the same as Intel in the sense that you need more information. You need a couple more bars to give you a tradable setup. So great on earnings, fantastic. I like that it pushed it out of this little channel it's been in. But I need a few more bars, Tim, and then I would only position trade it, look more cash flow versus you're looking for a short-term swing trade, I think.
I agree with that because, when you're taking short-term swing trades, you have the pick of the litter. You have to be choosy and you got to catch good, clean entry points. No reason to force an issue just because it's on your watch list. Now, KBH is on my watch list. I track it and actually I like playing it for cash flow over more like position style covered call type trading throughout the year. But that's a completely different set of analysis. I think it's a good cash flow vehicle, not necessarily a good swing trading vehicle. But look at XHB real quick, just the home builder ETF. You had the earnings come out on KBH and now XHB is breaking out. When you have context as to why the industry is catching a breakout, does it either add to or prevent you from taking the trigger as you see it on an ETF, Tyler? Because we know why this is up today because KBH jumped a little bit, right? But how do you approach the ETF?
The why doesn't matter to me. It never matters. Do I believe this more because the breakout was concurrent with a nice earnings announcement versus if it was breaking out on no news? No way. No way. I don't care why. So the why doesn't matter. Do I like the breakout? Sure. I would echo my comments on KBH. This is a position trading type of vehicle for me. It was slowing a little bit, but it's gone up a lot, so I'm not going to fault it. Yeah, Tim, I mean, look, it broke out yesterday. XHB broke out yesterday. Today's a continuation. Chart looks good. Trend is up. I just like this more as a position trade than a swing trade.
And then last thing in the news, then we're going to get down to some chart analysis for some trade ideas that we were discussing earlier in the show. But a couple of quick upgrades. I just want to give the news. We can take a quick peek at the chart, rapid fire style. Jpmorgan did upgrade Exxon Mobil. You guys were talking about it earlier to overweight from neutral. We analyzed crude and Exxon a little bit earlier, but yeah, they did catch that little bit of an upgrade. Nomura Instinet, I didn't know this analyst, upgraded General Motors. Both Ford and General Motors had some nice little pops here to start the year. A couple of the big automakers looking pretty good here. GM took a nice little run from 40 there to 50. Looks like it's extended, needs some profit taking here. Guggenheim upgraded Home Depot to buy from neutral as well. We've been watching this one stuck in the mud for a long time. Maybe we can get a little bit of juice here as that thing's coming off of support. And then the last one I saw actually was Albertsons, ACI. BMO upgraded at Albertsons options, the grocery store chain, after their earnings yesterday, to market perform from underperform, and they wanted to come up and do that. Guys, that's what I've got from a news perspective. Some interesting stuff going on out there, but I actually kind of want to talk trades the rest of the show. And Tyler, one of the questions I asked you when we started the show was, what are you trading these days? What are you approaching these days? And there's several things that you're focused on right now. Obviously, every trader has a basket of trades. We're watching short-term, long-term. We're taking profits at times and all those kind of things. But I've got some new charts that I find interesting. I want to get your read on them if we can.
Listen, this is what I love about tackle trading. And I don't care if it's the stock report or the options report or whatever insightful things Tyler is about to say out of his mouth, or Trade Masters. I seriously, it has made me money, and I'm not kidding. And I sit down when somebody else is a trader, analyzes a chart they're looking at. I sit down, I get my notepad. Doesn't mean I do everyone blindly, right? But I start taking notes because that process, I don't care if it's Frank or Tyler or Greg or Emily tonight, and I'm very excited for the Greg-Emily showdown. I start taking notes, and then I evaluate these notes and I see how it can work. And that's made me money. And it is that's one of the many reasons I love tackle trading.
Yeah, I agree 100%. So Tyler, we're going to play a little game. How would you play it? How would you approach it? What are you seeing? And if you are seeing the entry point, let's start with match MTCH. This one grabbed my attention in my morning scanning here, and I thought it was a good, healthy looking potential breakout. The wicks up there have me questioning where my entry point is. I'm looking at a breakout potentially on momentum here at 160, Tyler. How would you trade this one? Is there something here that you see as well, and how would you play it?
Yeah, I like the breakout, little high base breakout here. Volume patterns are great on the consolidation, not a lot of selling going on. So from a technical perspective, there's really nothing that I don't like about this from a technical analysis perspective. And when you look at match, this is different than XHB or KBH because it's got more volatility. It's moving more. It's got better trending characteristics. And so unlike KBH, I can look back and see plenty of prior breakouts and retracements that would have paid me money. That gives me a little bit more confidence in being willing to trade the current breakout. So, yeah, trigger wise, Tim, I think for some people it would have already triggered, but you could use today's high for further confirmation. You don't like the intraday wick. Obviously, you could do a stock trade. I've never traded match options. But if I take a look at the options liquidity, I'm not that impressed. It's okay.
They're a B. They're a B on options.
Yeah, not an A plus. They're okay. But for a stock like this, probably got earnings beginning of February. I'd probably be a bull call spread here, Tim. Buy the 160, sell the 170 out to March, probably.
Mm-hmm. Yeah, and I think with the price and all that, if you can get the fill, what you may have to do in the options market when you do that, if you've got B grade options, is break it down to long call, then short call. It can add complexity there, right, Ty? For some beginners, what is the spread on the bull call spread? Like if we look at the chart here.
Like if you go to March, you got about a 50-cent spread. It's not terrible, but so if you do both of them, it's 480. That's about 50 cents. It's about $1 bid-ask spread.
Yeah, so you might have some complexity getting a good fill, or getting filled to begin with. So that's where your option skill set is. And if you're a veteran, you can go and buy the long call first, get your midpoint fill, then come in and sell the short call most likely, and also get a midpoint fill. But I usually would submit this as a vertical first to see if it sticks, right, Ty? See if they take it. Yeah. Not a bad one there. All right, couple other ones here that I had. And then I've got a bunch of charts from Coach Frank as well. I want to play this game with DraftKings DKNG, one that squarely on my watch list, like a lot of other people. I'm obviously a holder of this one. I've been in this one for a long time. I've got a bias on it, so embrace that, understand that. I'm biased, I'm bullish. How do you play this though? Is that breakout clean, and is there a trade there?
Right. Okay, I'm going to push back on breakout here. The last two times we broke horizontal resistance levels on the way up, it's petered out and died. Now, the one thing DraftKings benefits from is there are endless string of headlines relating to gambling, right? New York's doing this, or some partnership here. Just an endless. And those can create little nice short-term momentum things where you have nice little stretches, certainly days, because of that endless string of headlines. But I mean, you know, do you think some kind of cash flow credit, something is the better play here?
I would
Just
agree.
because, I mean, the stock's personality. I mean,
Yeah.
fool me once, fool me twice, fool me a third time, that's on me.
Yeah.
Right?
Yeah. I think you need more patience. So if it's kind of like gold, right? Like if I'm expecting this breaks out and just rips, sure, maybe you get something like this, but here recently it's been a little more choppy. And so perhaps a higher probability cash flow play with a looser management makes more sense. I would agree with that.
That's interesting. I like the take on both that because obviously, you know, when you're approaching a company that you generally trade directionally, that's the way I do it, and hold directionally. Thinking cash flow is a different mindset, isn't it? So getting cushion, going deep, maybe getting a good credit, and the volatility juice on DraftKings will keep giving you good credits. I'm sure you could.
Yeah, I
Get a
mean,
nice
and
good
it's one of
cushion.
those things that like when you're a long-term holder, the chops, they don't matter as much, right? You know, when it starts to go down, you sell calls to thing. I mean, if you don't have a call, if you're, you know, I'd be uncovered right now until you get downward movement if I was a holder. But if you know, if you see price start to falter here and go down, then I'd sell a call. But I would be uncovered right now heading into this because you never know, right?
Yeah, I like it. All right, let's keep going through here. Now I've got about 5 ones from Coach Frank, who runs our Twitter feed. And by the way, anybody who's been a long-term, you know, member of our community here at Team Tackle, you know that Coach Breakout Frank is one of the most beloved. He comes in here every Friday, shows us some great charts. He's got the moniker Breakout Frank for a reason, but he has actually pulled me some good pullbacks here as well. Let's give you Netties first, NTES. This one's from Frank. Coach Frank says on Netties, ton of momentum, gave way to pull back. The 9 is providing a nice bounce today. Tyler, interest? And if so, how would you play it?
Look, you print this out and put it on your fridge. This is a textbook bull retracement pattern. It has everything. It has everything. It went nowhere for 6 months, breaks out on huge volume, right? Lots of participation, gets extremely extended, right? Ran too far too fast. I mean, shoot, this thing went from 90 to 115 in a straight line. And so naturally you get some profit taking, but notice these bars are not aggressive, right? These are just small, small range candles here. The volume wasn't aggressive, right? So not a ton of profit taking. Look, and buyers are already stepping up with a 9 EMA. This is textbook.
It reminds me a lot of the Peloton setup that you brought up. What was it, last week at this time on Trade Masters, where you had the sell. Once again, huge run up, came down, low volume on the way down, right? Low volume on the way down. And Tyler, if you were watching Trade Masters, I mean, nailed it. No, it's
I did nail that, Mark. I can't remember though. Did I win the belt that day?
Didn't. Listen, I told you that I thought this was an amazing trade. I did. I said I thought this was an amazing trade. And it was. Look, I mean, look at the price action the last 5 days. Now you should be taking profit now. You're at resistance. Don't be greedy. But I mean, that thing played off. You know, there's elements here to NTES.
Yes. Yeah, I totally agree. This is gorgeous. I like it a lot.
So love it. Frank always bringing the heat. Let's see if the next one has got you guys just as much excited. PRMW, smaller little stock play, Primo Water. They make those filters that people put on their taps, and obviously nice little breakout. Coach Frank is saying here just a breakout candidate. Ty, what you see?
It's pretty. It's cheap enough. I wouldn't fiddle with options. I would just do stock here. I have never traded this before. That's a clean setup. And I have nothing bad to say about this guy. You look at the weekly, yeah, you're also breaking weekly resistance. So you got some confluence there. Weekly breakout, daily breakout, market's bullish. It's clean. I like it.
Dirty little grinder right there, Marky. Yeah, that's kind of worm burner, isn't it? And nothing wrong with the worm burner. Yeah.
Listen, I mean, these type of, and Frank brought this up last week. I mean, I like the 15 option if you can get $30 for it.
Selling naked puts, right?
Yeah, if you can get $30, the option liquidity on this is not very good to say the least. But the spreads aren't too bad. If I could get $30 for the 15 on a cost average down, I mean, boring company, right? This thing's going to trade independent of a lot of the market. And so I like having a few of these, not very many, but just a few of these boring, out of the way things that I could cost average down. So another cheaper way to play it if you can get $30 for those February 15s.
I love the input there. All right, next, let's go to Johnson and Johnson. Huge weekly breakout and also pulling back on the daily. So we love the longer term weekly breakout. Now, a little retracement on the daily chart. Tyler, how would you play it?
Yeah, Coach Cody brought this one up when he did Trade Masters with me a couple weeks ago on the breakout to all-time highs. So weekly looks great. It did break out. It is at a record high. Look, this pullback's also really clean too. I mean, similar to Nettie's in the sense that had a nice breakout, good momentum, nice little pullback to the 9 EMA. I like this one too. I mean, you got to set your expectations. This is Johnson & Johnson. It's not some high flying momentum stock. So you can't expect huge things here, but as far as like a consumer staple, clean little trend and pullback, it's great. I like it.
Marky?
I was just looking at naked puts. I could get $50 for the 140.
Like
Which is down at the.
That's not bad, actually.
You know, like yeah. I mean, how much margin that going to tie up? Because I mean, it's above the old thing. Once again, these pullbacks. It's a little bit more margin than I like to tie up on that. So
you go buy. You could reduce it. Go buy a 120 for a penny, Mark.
We'll go buy a 120 for a penny.
You get your $49 instead of 50. It's still 1,400.
Yeah, I mean, I'm not getting. I mean, we're so greedy, right? Like it's we're so greedy. I'm only getting, what's my return on that?
50 on 1,400.
Like
3.5.
Back in the what?
3.5%.
Yeah, I mean, we're so greedy these days, right? I'm only getting 3.5% in 37 days. But like, I like the general setup. So I'm not going to do that one because I just not going to tie up that much buying power because I can just find better opportunities out there right now.
Yeah.
But like the concept, and go to Jack in the Box. Jack, J-A-C-K. This concept I really like. So we had a long consolidation pattern from July to November. We had a breakout, right? So we have a breakout of that level, and then we pulled back to the breakout point. And so I was getting like $100 for like naked puts down at $80, right? Down at the old support level. So I mean, this is one of the things I've done a lot of. You break out, but the breakout doesn't peter. It comes back down. I got a lot of ways to win a naked put there on a company I might be willing to own. And so when it starts to come down to the old breakout point, I look at what are the prices of naked puts down at the old support level.
Yeah.
Because if the breakout level holds, I win. And if it doesn't hold, well, I still have a lot of ways to win, right? A lot of ways to win. And so that general technical setup, when I see it, that's why I look there, is because you can break out to the old thing, look at the old support level. That general, it's a very technically consistent, makes a lot of sense pattern, right? So, but it's a little, I mean, once again, we're greedy right now. 3.5% in 37 days. I can just do better right now.
Well, I'm going to stoke your greed pretty quick here because we're going to go from a boring company to one that can fly. Look at SunPower, SPWR. And Coach Frank's note, simple, just a breakout candidate. We're talking solar here, guys. We're talking an area of the market that can rip, and it's been ripping here for a couple months. Now you've got triple top breakout here, potentially developing a little tricky entry point, maybe Tyler, with the tail candle kind of from five bars ago. What are you seeing here, Ty?
Now Mark just has naked puts swimming in my head here. Now I'm going to default to that on every
No,
one of
I
these.
already looked at the 20. I already looked at the 20, so I'll give you that.
What is it?
For the 21, and the options here are really good. The 21, which is above that last support level, I can get like $60 for 50, somewhere between 58 and $60
and we're
for.
Fed, right?
And now my return's a lot better, right? Now my return's a lot better. And
Yeah, so this is actually a perfect follow-up, right? First of all, to Mark's point, yeah, it's 2 cent bid-ask spread. I mean, 272 contracts traded today, and it's a $20 stock. You're getting paid the same amount on SunPower, a $30 stock, as you were on Johnson and Johnson, $150 stock, right?
Mm-hmm.
And so I'm getting the same payday, but the margin requirement is going to be so much less because this stock is, 20% of the other one's price. Yeah. So Mark, you're getting like a 25% return.
Yeah, and once again,
Like
I mean,
10x.
it just talks to the greed of the market right now. And once again, when the market's greedy, I'm going to be greedy too. I'm not going to be irresponsible. Now, there's a lot more volatility here, right? But it's in a hot area of the market. SunPower, one of the analysts came out yesterday and gave it a neutral rating because it's ran up quite a bit, right? I mean, it's ran up quite a bit. But solar, and once again, there's no way to quantify what I'm about to say from some mathematical formula, but I don't have any exposure to solar right now. Zero, nada. I wouldn't mind a little exposure to solar. So let's say it crashes, right? Let's say it crashes. Well, it's the only exposure to solar I have. It's a stock that I could cost average down really easy. If I get put the stock, I'm going to get massive call things to cut it down. And so it's a stock that I feel like I can manage. Now, I would wait for the breakout signal. Now, I'm going to get a few less dollars for my naked put, but I would wait for the breakout signal before doing that, because I'm right at resistance. But this one was on my list as well. And of course, you can play it directionally as well on some kind of, but bull call spread. Buying options is going to be really, really pricey.
And the ROI in the naked put is so high anyways. It's like,
I think
really
if you go
need the
long,
bull call.
if you want to play direction, I think you can play the equity.
I mean,
Yeah, you just buy the stock.
Yeah. I think
The other thing is what are the odds that the bullish narrative around solar and the Democrats changes in the next month? Like what would it take for this thing to go down to 20 bucks and stay
even
down
if it did, Tyler, I mean, and this is the process I go through on all this stuff. Like I forced myself to do a few EV trades. I forced myself to do a few clean energy things. Not too much, because balanced approach to the thing, but it's exactly that, Tyler. It's like, yes, solar can get not hot for a week, right? It can get not hot, but is the whole narrative going to change?
Yeah.
In 37 days where I can't adequately, that's very unlikely.
Agreed, 100%.
Loving this, a lot of fun. I'm loving the analysis too. One more here. I find
Tim,
this.
can we just stop? I need to go sell some puts on SunPower. Can we just?
We're going to do one more. I think you're going to want it, by the way. I think you're going to want it because this one's different than the charts we just looked at. A lot of pullbacks, a lot of momentum, a lot of breakout. Take a look at Doyu, Doyu. Frankie's saying reversal, breaking above resistance and the 200. So this one's had a downtrend mark since September. It's brought it all the way back down to some support. Now we're seeing reversal characteristics developing. Boys, how'd you play it?
You go first. I'm gonna do that.
If I'm going, let's see, it's a $12 stock. I mean, is it plagiarism if I just stick with the naked put theme?
No.
I don't know that I want to go. I would probably, if this is a position trade, I don't know that this would be a swing trade for me. If I'm going to bottom fish on something like this, I know there's a lot of potential overhead resistance. So I feel like that by nature means I got to have a little bit longer time horizon to see this play out. So I'm initially thinking position trade, and I don't know anything about the options. Let's assume they're liquid. I don't know that I just want to buy calls on a $12 stock because it's cheap enough. So I'm either I'm going to build a stock position, and I would call today a trigger, or B, I'd sell puts. For me, it'd be either buy the stock, position trade, or
what about
sell some
another alternative here? And I've done a little bit of this lately. It is buying the equity and smashing the aggressive covered call. Like if I go out to the 1250, because I love the support level, first of all, that support level is really pretty.
Yeah.
Buying the equity and doing the aggressive covered call, my return on that is going to be pretty good, right?
Yeah.
So if it goes up and takes off, right? I'm locked. My max profit is booked, right? $1.35. Little bit of price appreciation You know,
Yeah, which is huge on an $11 cost, right? If
which,
you
you
get-
know, and so I'm getting a massive return. I do have, and I only do this when I have like a really solid support level underneath, right? And so if I go to the, you know, I'm looking at the weekly chart, you know what, the bears had a good month to try to send it lower than
Mhm.
that, to try to send it lower than that.
Yep.
And so, like, you know, this general pattern, and I did this on a cheaper stock. Go to PEIX. You know, so this general pattern I've done on a few things. So it came, once again, run up, come down, support, and those aggressive calls really treated me well. Now, of course, it's running up and all that. But once again, and this is what I talk about be happy making really good returns. Because in hindsight, I'm like, well, I should have just let it run to $8 and then got it. Well, that's with perfect hindsight, right? I don't have perfect hindsight. But that concept on these stocks that have ran up, go to another stock, Solo. This general pattern on these stocks where you had these run-ups and they came down and then they formed these support levels. You're seeing this pattern a lot in the market, and I've been playing it the same way. Very aggressive, and yes, could you make more money sometimes? Sure, but you know, once again, I'm not going to. If my biggest complaint on what was the symbol of that?
Doyu.
If my biggest complaint 37 days from now is that I made $135 on very limited capital,
Yeah.
once again, this is what I talk about don't be so greedy that, you know, you're complaining about making really good returns.
Mm-hmm.
That's, I don't know if I'm going to play it, but that's how I would play it if I did.
Interesting. I love this, guys. I mean, here's the thing. We're thinking out loud. We're working through the detail. We're looking at problems. We're looking, and this is the nature of trading, right? You find good technical patterns, and then you can backfill into your system as to, you know, different ways and different approaches that you could trade something.
Yeah, and if this had just an $11 put, I'd probably just do that, but they got 250 strike prices.
I see.
So
Gotcha. I love it. By the way, follow Coach Frank on Twitter at Tackle Trading. He runs a Twitter account, puts lots of good charts out there on a daily basis. Definitely worth the time, worth the follow. If you're a Twitter user, go and follow Coach Frank on Twitter at Tackle Trading. Guys, that's our show here.
Hey,
for
I got a
today.
couple weird news items if you want.
Yeah.
SKLZ, it's one of the spackies. Skills came out with an outperform by Webbush. Now, if you don't know the SKLZ, there's some video game stuff here. Now, if you don't know the analyst Webbush, there is not a price outperform. All stocks outperform. Everything has $100 million price target, and that, so take it for what it's worth. But have you guys been doing anything in SPACs like I have?
Yeah, there's a couple of them that Mark, I've played Palantir, you know, just different trade setups, stuff like that. Not nearly the level that you have, you know, and I understand the fervor and the interest in the SPAC market right now, and there's so much there, but I haven't approached it anywhere near the way that you have. Nope.
I sadly haven't either. I don't even know what a SPAC is, to be honest.
Special purchase acquisition company, where they can IPO new companies into the market by going around processes that they didn't used to be able to do, Tyler. So basically they can bring these ideas to market, make it public, and people are fired up about them. All right,
do you want to know do you want to know my SPAC idea of the day?
Sure. Sure. Matt's not here, so go.
No, listen. SNPR. Now they haven't merged. Now when I look at SPACs that haven't merged with someone, because once again, I don't do any of this blind. I make fun of me being millennial Mark, right? But I use all technical analysis and my best qualitative read on things. So HYLN, the individual that owns this SPAC, brought this one to the market, right? So he has and once again, it's at $17, which is still a lot higher than 17, and obviously had great run. So I look at individuals, because there's some real dog crap out there in the SPAC market. So I look at individuals that have a reputable.
Back on that chart for a second, actually.
Before we go too far,
this is my problem with SPACs. is that we can go through periods where they can blast off from 20 to 60 and then they just kind of fall out of favor. And then for 6 months, now we're back down here at 17. So they go through these boom bust cycles, you know, even just in 2020, and they're so
don't buy at the top.
Degree of difficulty on these SPACs, though. I mean, you got to admit, they're not all just home run trades. There's a lot of reward, but there's also a lot of risk in some of these where they just kind of meander and do nothing.
Well, if you buy at the top, if you buy after it's ran, you shouldn't do that, you know. But SPNR, we're still down at the bottom. Hey, listen, this is SNPR. All right, so SPAC hasn't merged with anyone. They don't have a company yet, right? So a special acquisition company, it's another way for a company to do an IPO, right? So they can merge with a SPAC and go public through that. Now, SPNR, the same company that brought HYLN, they haven't merged with anyone yet. Because the manager is a reputable manager, there's options on that bad boy. So if you go out to the trade tab, if I buy
real quick, so we're basically, this is like trading a baseball player. I'm just betting that they're going to have a good season. Like, I don't even know.
Yes.
I don't even know what company he's going to buy, and I'm just betting on the manager.
Yes. Now, the way I've been doing this, and I did this with IPOF and IPOE recently, buy the shares, sell the calls. If I go out to the IPOF, and once again, buying the shares back when they were at 12 bucks and selling calls. And once again, should I have just not sold calls? Sure, I should have just let it go, right? But like, not complain about money. Same situation. Both of those have been winners. Going out to the Februarys and starting to sell calls against them to lower my cost basis. And I can get a good chunk on those 1250 calls.
Yeah.
And so like, that is how I think the quote unquote safest way to play SPACs are. When you can get them near their base price, because if a special acquisition company does not form with someone, it's still 10 bucks.
But let me throw this out there at you. And I mean, if we're going to go for this, let's just go for it. Here's my problem. I believe 99% of traders don't have a need to trade something that has complexity. You know, when there's so many different ways you can just knock down targets in the market with naked puts on liquid companies that you have, you know, historical fundamentals on and technicals and all those kind of things. So when we're talking about these areas of the market, I see the interest, I see the message boards too. I see the juice that people are talking about. I even see the probability in some of the setups, Mark. I follow and track that logic. But then when I'm thinking through the whole totality of it, I'm like, all right, does, you know, Jim in, you know, Kansas, do they need to get in the SPAC market when they're still learning how to trade naked puts on basic companies, right? Things like that. So a message from me as a veteran, I would just have very much caution towards traders trading something they don't understand. I would give them direct advice to not do it, quite frankly. But I don't know, Mark, any thoughts on that?
There's just a lot of free money out there right now on it.
Frothy, millennial,
I mean,
Mark,
like, listen,
smash the buy button, Mark.
I mean, because I mean, think about my logic. I'm talking about something. I mean, I guess you have to understand how SPACs works to understand the logic behind this. Like, this thing is not really going down. Go to CCX, a SPAC that's been around for a while now.
Can I just say that I have never had a string of tickers as foreign as what we've talked about in the last 3 minutes? I'm like, it's
CCX. All right. So in the height of COVID, right? In the height of COVID, where everything was algo selling off, everything was getting down, but the SPACs almost immediately came back up to their $10 base level. Notice CCX in the November election. There is a $10 base level with SPACs. A SPAC before it forms is not going to drop to $2, because if they never form with someone, there is like this redemption fee that you get. And so there is this base price that is built into the SPAC. Now, once they form with someone, all bets off, right? Maybe they form with some piece of crap that everyone hates and they can go down, or like most SPACs lately, they go up. But there's that base price left. And so if you can like find stocks with options, get them close to the base thing, you can cash flow this, and it's the easiest money in the market right now, because there is an inherent mathematical floor on them.
Until it's not the easiest money in the market, quite frankly. And I'm going to just push
You're
back a little
you're
bit.
not following what I'm saying.
I do follow everything you're saying, but there's complexity to a new movement. This is new to 2020, and all the anticipation and the logic behind how SPACs work. We don't know if this is even going to maintain regulatory status the way that it is. I've seen some
SPACs have
chatter
been
out
around
of the
for
New York
years
Stock
and years and
Exchange,
years and
but
years and
the
years.
popularity has exploded, and it's also bringing new eyes into it. And I've seen some critique around SPACs. So I do believe there's a lot of interest in SPACs. And I think, and I've even said this, Mark, to you, I think when we look back at 2020, one of the notes in the news, Tyler, historically will be SPAC movement picked up a lot of steam. You know, think of all the companies that came to market through this process, you know, and the way that it's gotten, you know, some popularity right now. I get it. I'm just
Well,
not.
I can promise that's the last time I bring up a SPAC on the halftime show.
Oh, goodness.
See, this is like, and this is how I see this all as a bubble. Like the prices of Apple and Microsoft, they're a bubble. This is all just one gigantic reflection of a bubble. I don't see one area of the market popping the bubble and others not. So,
yeah,
I think it all pops together.
Tyler,
When it pops though, it won't go below 10, right? Because that's the base price.
That's what my whole point is on selling SPACs before. Like if the bubble were to pop, this thing's going down to 10. It's not going down to 9. It's not going down to 7 unless and even if there's short-term volatility, there's a base redemption price. So it's not this. Listen, I'm very conservative. You know, when a SPAC chases up, I'm not going to chase it. Like this is like trading bonds right now.
No, you just went all in on SPACs. You can't walk it back. Can't do
All
it.
right. I'm gonna have to. I might be last to the party here, Mark, and I am more than comfortable with that because my systems are working. You know, it's like I don't always chase every new trend in the marketplaces, and it's not that maybe I shouldn't. I should always keep an open-minded, new things that are developing in the markets and whatnot. I just still have some concern around the whole space. I'll be honest. I see a lot of frothy nature. I see the people who are trading them feeling like it's the easiest money in the market that they'll never lose on. By the way, when I hear statements like that, I get very concerned about an area of the market because that's can't be true. The nature of reward, risk, and probability in financial instruments, there's always a risk, period. There just always is. So I've got to examine it more, Marky. I got to think through it.
Well, I mean, I guess my point is you trade a breakout on SPWR. It's no different than a freaking SPAC. I mean, SPR is up, what, 200% in the last 3 months?
Mm-hmm.
I mean, and you know, to say that that's a fine trade, but a SPAC that hasn't even redemption where you're selling calls against it isn't. I mean, call a bubble, you know, enjoy the whole thing or don't enjoy any of it.
I got your perspective on it. All right. And by the way, Mark, we've got some things that we're going to be doing tonight. We do got to talk to the team about out there as we're kind of wrapping up the show, though. We've got Trade Masters at 7, I believe. And then we've got Tyler, you're back on tonight for a mastermind group. Is that right?
Oh, yeah.
Yeah.
Condors, baby. Let's do this.
Yep.
Yes.
Mark, Trade Masters is our Wednesday event, one that we get excited about. I love it. I think what you're doing there is amazing, bringing the coaches in. I love the way you run the show.
Seriously, money. I mean, it's serious. It's like having experienced traders bring trade picks to the audience and just sitting there and watching it and getting the pick and getting the logic and the reason behind it. It is just, you can't do that much work on your own in 45 minutes. Like I mathematically could, having other people do it is just amazing. Trade Master tonight, 7 p.m. Eastern here on our YouTube channel.
Mm-hmm, absolutely. All right, guys. I had a lot of fun today. A lot of great setups, and I even did enjoy the conversation there about those SPACs, Marky. We might disagree on it, but that's okay as well. Different takes for different traders. Even veterans in the market can do that sometimes here, guys. A lot of great trade analysis. I love the way you guys analyze naked puts today. I thought it was really, really cool. A lot of value for our team out there. If you've not yet done it, by the way, thumbs up always helps this show. Team Tackle, I appreciate you guys. Thought a lot of great attitude, atmosphere in the chat today, going back and forth. Great to have you as always. And if you're new to our channel, we got a lot of new members over the last month or two. Guys, we appreciate you guys. Make sure you come back every day. And if you've not yet done it, click subscribe, click the bell. Make sure you are joining us on a daily basis for this halftime report. All right, everybody, we are done for today. We'll see you guys tomorrow.